Pi Day was supposed to be a grand celebration, a moment of triumph for the Pi Network community. Instead, it turned into an emotional roller coaster as a massive sell-off sent the price of Pi plummeting, leaving many pioneers stunned. This wasn't the price surge people had been hoping for. Instead, Pi's value took a nosedive, and in its wake, the entire ecosystem buzzed with concern, speculation, and heated debates. What went wrong? How did excitement turn into panic so quickly? But before we dive into all of that, let me ask you, did you see this coming? Were you expecting Pi to skyrocket on Pi Day, or did you anticipate this major sell-off? Drop your thoughts in the comments below, and don't forget to check out my previous videos to catch up on all the latest Pi Network developments. The link is in the description. Also, show some love in the comments, type Pi Network to the moon, and let us know where you're watching from. If you appreciate the updates we bring to you, make sure to smash that like button, share this video with your fellow pioneers, and subscribe so you never miss any breaking news on Pi Network. Your support keeps us going, and we truly appreciate every single one of you. Quick disclaimer, this video is for entertainment purposes only and does not constitute financial or investment advice. Always do your own research before making any decisions in the crypto space. Alright, now let's get into it. At the heart of the chaos was a major cleanup operation, one that wiped out millions of Pi holdings from unverified accounts. The Pi Core team had been warning about this for a while, but when it actually happened, the impact was seismic. People who had been mining for years suddenly saw their balances vanish because they hadn't completed the Know Your Customer (KYC) process. The frustration was real. Some pioneers, fearing that more restrictions were on the way, rushed to sell whatever Pi they had left before they lost even more. This panic selling flooded the market, and as any crypto enthusiast knows, an oversupply of sellers with few buyers is a recipe for disaster. But here's the thing, this wasn't some random crackdown. It was a necessary move. For Pi to be taken seriously in the broader crypto space, it needs a strong foundation, and that means ensuring only real users, not bots or multi-account miners, are part of the network. This cleanup was the price of legitimacy, but that didn't make it any less painful for those who were caught off guard. Then there was the Pi Day hype. The days leading up to it were filled with wild expectations. The community was buzzing. Would this be the moment Pi finally went fully open? Would major businesses announce integration? Would Pi finally land on the biggest crypto exchanges? Speculation was off the charts, and people were dreaming big. March 14th, 2025 was supposed to be the day. When the Pi Core team finally made their announcements, the response from the community was mixed. Rather than unveiling groundbreaking developments or a sudden leap forward, the team provided updates on ongoing technical improvements and the gradual expansion of the ecosystem. While these updates were meaningful in the long-term vision of Pi Network, they fell short of the game-changing revelation many had anticipated. The excitement that had built up over time led to inflated expectations, and when reality didn't match the hype, it created a sense of letdown among those hoping for something more immediate and dramatic. This reaction is a common phenomenon in the crypto space, where speculation often fuels unrealistic expectations. Many community members were eagerly waiting for a major announcement, perhaps a full launch, major exchange listings, or a sudden surge in value. Instead, they received incremental progress updates, which, while important, lacked the dramatic impact they had envisioned. As a result, instead of celebration, the atmosphere turned to frustration for some. However, for those who understand the long-term nature of blockchain development, these steady improvements still signal progress, even if they don't come with the explosive excitement some had hoped for. And in the crypto world, disappointment often leads to sell-offs. Another major factor in Pi's price drop was its limited accessibility. Unlike Bitcoin, Ethereum, or other top cryptocurrencies, Pi isn't freely traded on major exchanges like Binance or Coinbase. Instead, it's stuck in a closed-loop economy where its value is largely dictated by peer-to-peer transactions and internal markets. That means no open market price discovery, no external liquidity, and a lot of uncertainty about what Pi is actually worth. For the hardcore Pi believers, this isn't necessarily a bad thing. After all, the goal has always been to build a real-use economy first, before jumping into open exchange trading. But for those looking for instant liquidity and massive price jumps, it's frustrating. The lack of an open exchange listing means that even if demand surges, there's no free market to stabilize the price, leading to extreme volatility and sudden drops like the one we just saw. So where does Pi go from here? Can it recover from this major sell-off? The short answer, yes, but it won't happen overnight. Pi's success has always been tied to its real-world adoption. If more businesses, merchants, and service providers start accepting Pi as payment, its value will naturally rise. The more useful Pi becomes, the stronger its economic foundation will be. The open mainnet was a major milestone, but adoption is the real challenge. For Pi to prove its value, businesses must accept it, and it needs real-world integration in sectors like real estate and e-commerce. Strategic partnerships, user incentives, and strong infrastructure will drive this process. Equally important is transparency. Regular updates on progress and challenges will build trust and confidence in Pi's future. Clear communication builds trust and prevents speculation from overshadowing real progress. If users and investors see genuine effort and commitment to utility rather than just hype, confidence in Pi's future will grow. A strong, open dialogue between developers, validators, and everyday users will be essential in turning Pi into a lasting and widely used digital currency. The Pi core team needs to be clear about the roadmap ahead, when exchange listings will happen, what partnerships are in the works, and how they plan to make Pi a widely accepted digital currency. The more certainty they provide, the more confidence investors and users will have. And let's not forget regulation. In the evolving landscape of global crypto laws, compliance is key. If Pi can navigate the regulatory hurdles and align itself with financial institutions, it has the potential to break into mainstream finance and become a legitimate force in the digital currency space. Despite the recent turbulence, Pi Network remains one of the most active and passionate communities in the crypto world. Sure, some people panicked and sold, but many pioneers are still holding strong, believing that this is just a temporary setback on the road to something bigger. The real question is, will this price drop be just another bump in the road, or is it a sign of deeper issues? That depends on how the community and the Pi core team respond. The future of Pi isn't written yet, it's being shaped right now by the people who believe in it, build on it, and use it. If Pi can weather this storm, prove its utility, and expand its real-world applications, then this sell-off will just be a footnote in a much larger success story. What do you think? Are we witnessing a temporary dip before the next big surge, or has Pi reached a turning point? Let me know in the comments below. And if you have any contributions or questions, feel free to drop them as well. I'd love to hear your thoughts. If you found this update helpful, don't forget to like, share, and subscribe to stay updated with everything happening in the Pi Network ecosystem. Your support helps us keep bringing you the latest insights and developments. Thanks for watching, and I'll see you in the next video.